A white knight in shining armor. That's what the vaping industry needed after one of the nation's largest financial institutions, TD Bank, and its Merchant Solutions division executed a calculated attack on the Canadian vaping industry. As RegWatch explained in January, TD Bank canceled the online credit card processing services for over 150 vaping retailers, and the surprise announcement left many hung out to dry. The shocking announcement came in a letter posted December 19th, just days before Christmas. TD executives informed merchants that vaping retailers in Canada are now to be considered the equivalent of tobacco merchants. TD gave retailers until January 13th to find another payment processor, leaving most only 2 weeks' notice to save their online business. Well, Jack, you were one of those retailers that received a termination of services letter. As one of the pioneers in the vaping industry, how would you characterize TD's behavior on this matter?
Cruel. I mean, they gave absolute, to give 2 or 3 weeks notice for people to find a new, you don't even have any ability to negotiate terms with another merchant. You got to take what you can get, because otherwise you're not going to be able to service customers and they're going to go elsewhere. So we're being forced at a pretty critical, this is a very busy time for our industry, for many industries, but for our industry, it's very busy. And to be thrown this kind of a curveball, it seems like hurtful. It seems like it's intended to hurt the industry.
But Beatrice, TD didn't apply this decision to all vaping merchants in Canada, did they?
What TD had chosen to do was to get rid of about 99% of the vaping industry for online transactions. And instead, they decided to keep about 10 or 12 of their largest clients. So, it's pick and choosing who they want to keep and who they don't want to keep. And so it's affecting, 99% of the industry, basically.
TD Bank's decision to cancel online credit card processing for the vaping industry is rather perplexing, given at the time executives would surely have known about the federal government's plan to legalize vaping under Senate Bill S5. The loss of payment processing would have wiped out online vaping retail in Canada, but one person swooped in to save the day. That person is Carl Zank, and RegWatch caught up with him last month at Canada's Vape Expo in Toronto.
I worked in the industry for 15 years. I worked directly for the large processors in Canada. And as you may be aware, certain processors like certain industries, and certain industries are not accepted by the big processors. So what I went out and did after 15 years and being tired of turning away business, I created a brokerage that essentially allows me to go and form large partnerships, which I did with the CVA. And I guaranteed, obviously, good credit card locked rates to anyone that's involved with the CVA. And then the online part of it is where, a lot of the large processors they don't want that business. They turned it away. So TD turned around about 150 accounts away.
We covered this, it was our first story for the new year in 2017, and it was very specific. In fact, it was a bit nasty. It was December 18th is when the letter, I believe, was dated.
Correct. Just before Christmas, that's right.
That's heartless.
It was heartless. There was some backlash, and I think they gave a little bit of an extension. Generally, the large processors will give a few months notice. That was rather quick. It was rather unprofessional. So we weren't, I was in the right place at the right time, and I had a partnership with Mirko and Cygate, who actually came to the rescue, approved all the accounts in a timely manner, and since that time we've boarded 150 online domains. So what you see around here today, most of these people have a website. They want their customers to have the flexibility of going into their store, but also to buying online, and so we took care of them.
So you guys are the company basically that swooped in and saved the day.
Absolutely. I appreciate you saying that, but we absolutely did. And we did it from a brokerage perspective, because I can't represent one company, because they might say, well, we like your store model and retail and card present face-to-face transactions, but we don't like your online. So being in the position that I am, I have rather very, very professional relationships with the processors, but at all levels. So high risk, we call it. No risk, which would be retail, And I support the industry Canada-wide and obviously in the U.S. as well.
So let me ask you this, obviously being from the industry and close to this entire issue, how is it that something so essential as merchant services and banking, credit card processing, you can't be in business without that, obviously.
You cannot.
No, and so we're at a time here in December when Bill S5 has already been introduced. The federal government has already said they're going to make vaping legal.
They are. We're
and so why did TD make this decision? It just seems asinine, to use a very pejorative word.
Yeah, I dug into it a little bit. I don't know. I think that, and it's weird because I'm not sure if you know this, but they picked and choose. So they actually kept, I think, 10 or 15 of their larger clients. So they didn't really, they gave a rule, they made a rule up and they made a decision. They picked and chose, and they let 150 people or companies hung out to dry, and then obviously they looked at their banking relationships on the other side and what they make on the retail side of things, and they said, oh, well, we'll keep you guys.
So it couldn't be a total moral stand, whether that's good or bad. Their
Correct.
Stand, it was on both sides.
It was, they were talking on both sides of their mouth. We have no idea why they did it. They came up with something, but they did not. Usually what they do is they say, okay, we don't touch this industry, and here's our reason why. Here's your 6 months notice, go find another processor and professionally do that, and we'll help you. And that's our rule, and going forward, we don't accept that industry. But they picked and chose, and it wasn't the most professional thing I've seen, that's for sure.
Do you think vaping has been stigmatized?
No. I mean...
well, at least to TD.
Yeah, well, TD, yeah, I tell you. I guess my answer would be yes on that one.
How purposeful would something like this be? And let me qualify that with, I'm assuming that the knowledge that the processors have that they can pick and choose winners in business.
Right. So, I mean, I have the knowledge to do what I did. And I couldn't just step into it tomorrow if I didn't come from the industry. So I learned a lot. And to my earlier point, I just have the experience. And when working for one provider, there was a lot of business that I couldn't do, and it was tough. So again, going back to the brokerage model is really what puts me in a really good spot.
When I look at what you guys did here with the industry, seems very properly capitalist and free market. They've opened up a spot, and you guys stepped right in and are proving that it's a good business.
Yes, and I have some thanks to the CVA and to ECTA, because there was some panic. And to my partners, so there were many conversations, but everyone just came to the plate and they provided the proper information, and we got back to them. And it's usually what takes 2 weeks to 3 weeks to approve. These guys were approving deals within a couple days, and so people really weren't down too long. But yeah, it was very well done. Everyone came together. The CVA again is my main partner. And professionally reached out to all of their members, and collectively we were successful.
Moving forward in Canada, are you expecting at some point to face some competition when big banks get back into this?
Well, that's the thing. I think I'm seeing a lot of loyalty. I'm seeing a lot of professionalism. I'm seeing a lot of dedication and loyalty. And I think with the damage that was done with TD and some of the other providers, I think there's going to be some great loyalty going forward. And you know what? For those out there, these are competitive rates. These are not just, hey, we know you're high risk and we're going to charge you, huge percentages. No, we were fair, and the CVA, they bargained hard, and they've got competitive rates. They have more competitive rates that right now, even if they called their bank tomorrow and said we want to, no, they can't. They really can't compete. So I'm in a really good spot.
So yeah, they pissed off a few vaping companies.
They definitely did. I was in the right place at the right time. I thank everyone, and I have to say, everyone is all these people, these companies, they work very hard and they are professional.
Well, that's it for this edition of RegWatch. Before you head off, please like us on Facebook, and don't forget to follow us on Twitter. For regulatorwatch.com, I'm Brent Stafford.